Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what in the hell is happening because Tesla is kind of going all over the place. It's not like exceptionally volatile, but there's a lot of traps being set over and over and over. So we're going to discuss all of that. So as usual, if you enjoyed, don't forget to hit that like button. Again, this is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is below. $3 a month where I share my intraday thoughts on Tesla as it's moving throughout the day. So if you're interested in that, definitely go ahead and check it out. But moving right into it, Tesla closing the day down, unfortunately, to about 1.5%, which is putting us at about $240.50 per share, which compared to the market is unfortunately an underperformance. We're kind of going all over the place. When the market's green, Tesla's red. Or at least underperforming. When the market's red, Tesla's outperforming. We're almost doing the inverse, which is very strange. But nonetheless, talking about the movement today. So let's go on the 1 hour, the 65-minute chart to start things off, right? So we start off the morning pretty boring, honestly. Nothing really happened for the first couple of hours, just trading within the same range we've been trading for a while now, right? So pretty boring. But then the volatility slightly kicked up a bit, right? We ended up just pretty much collapsing right underneath that 240 level, which wasn't great. Started closing candles at levels that we haven't closed candles below, which is not good, right? You can see this line right here, about 242, kind of 0.8-ish, right? We never really closed a candle below this. Every time we went below it got stuck back up. And unfortunately, we closed the candle right here, which is what I told my members about. I told them that somewhere around down here. I can't remember exactly where. I think it was this one here. No, that's a bullish divergence. I think it was this one. Yeah, right. Talked about that right here. How, we're potentially closing a candle at a level that we never really closed a candle. So that's something to be, a little bit cautious about. And that's exactly what happened, right? We did close that candle and then the sell-off continued, or really started truly. And then we had a massive sell-off to 235. Beautiful bounce from there. And we actually closed back above 240. But the close is not super convincing for me. Now, quickly, if you go over to the 30-minute chart, we are seeing a bit of a bullish divergence, right? You can see as we are making lower lows and on the chart right here, you can see, right, we are making higher lows on the RSI, which isn't too shabby. So bit of a bullish divergence, but nothing completely crazy, but it's definitely showing signs of that. So that's pretty nice to see. But going back to the 65-minute chart, the one thing that I don't like is the fact that, so we had a bounce, we closed above 240, which is great, but to me, 240 is an important level, of course, because that's where the 100-day moving average is, which we're pretty much closing right on it, but kind of 242, kind of and a half-ish is a bit more important, and that's simply because of the fact that it seems like it's a more important level than 240 because this is that white line right here. You can see, right, we keep bouncing specifically off this kind of 242 and a half-ish level right over here several times. Obviously over here is about 240 right here, but these bounces right here was at that level I just talked about. These bounces all the way over here, right, also around that, right? And then even over here when we kept bouncing and having all these wicks down below, we never really closed below that 242 point kind of 5.8-ish level, right? We constantly closed above that until we finally didn't. And now, unfortunately, we're, bouncing back up to that level. And we're actually, unfortunately, at least for now, finding some rejection. So that's not really what you want to be seeing here, right? That's not really ideal. I wouldn't say it's that bad. And I think it's actually fairly reasonable to expect it to potentially break above it. But it is something to just at least pay attention to, right? It is technically now going to be a resistance, not a severe resistance, but a resistance nonetheless. So definitely watch for that. Now, going to the daily here quickly, you can see the daily candle, right? It is kind of showing once again another hammer candle similar to this. Now, this is why I'm saying Tesla's full of traps. Today was a massive bear trap, right? The bears that it broke down below 240. Maybe they made some money to the 235 move, but people that probably entered too late probably got trapped pretty aggressively there, right? Because we had a pretty substantial bounce from that 235 level. But definitely a bear trap, right? We had a bull trap over here, right? This hammer candle was again in a downtrend from here, right? You can see this downtrend that we had into a nice, beautiful green looking hammer candle. I did say how the candle itself, like the thickness part, right? The top part of it can be a little bit smaller. It's more ideal, but nonetheless, still pretty damn good. Unfortunately, it was a massive trap, right? I mean, we did have a bit of a rally, to be fair. We did go up to 250, which was almost my price target. So we were half right about it because we did get the rally, just not to 255 as to where I expected. Thankfully, I was selling calls against it regardless. You remember in the video, I did say how I am still selling calls, but I'm leaving some on the table to sell if we go higher. So thankfully, we did hedge our position there a little bit. But nonetheless, still overall, in my opinion, a bit of a bull trap, right? Because it didn't really rally as high as it honestly should have. So that's unfortunate. And then we have, of course, had a massive bear trap today. So there's just a lot of traps. It's not really like straight volatility, but there's just trap after trap after trap. It's kind of ridiculous, honestly. It's a lot of traps happening. So The daily is still looking kind of wonky though, right? I mean, yeah, we know we did close above 240, which is great. We did close pretty much at the 200-day or 100-day moving average, which is great. But RSI still looking a little bit weak. MACD still looking pretty bearish, right? Not like substantially over the top bearish, but, absolutely more bearish than bullish. There's no question about that, right? And on top of that, we are approaching a very, very important level, right? So this is an important level for two reasons. Number one, we're still technically retesting this yellow line, right? We still haven't actually fallen below it. We did it for a little bit, but we actually did recover above it as well, which is good. So this, in theory, can still just be a simple bullish retest. But another thing that's probably even more important is the fact that if we zoom out, as you can see, we're approaching the bottom of this channel once again, this absolutely massive channel that started all the way back here in January of 2023 when we had that $102-ish sell-off, or towards that $102 level of a sell-off. And then ever since, we've been in this massive channel, right? Pretty much since the start of the year. And now we're once again at the bottom of this channel. We talked about it many times on the weekly, how this could still in theory be a massive bear flag, which would be incredibly bearish. So that is still a possibility. So that's something to consider. But if there is a place to bounce, if there is a place for the bulls to step in and to finally stop this massive sell-off and this bleed out and whatnot, I mean, not necessarily right here, right now, but we're extremely close to it, right? As low as maybe even 230, honestly, right? But roughly this area, at least for more rebounds and maybe a few dollars below that, that is the area the bulls, if they're going to show up anywhere, this is the place. This is the area. This is the bounce area, right? Because if we collapse below this, things will get bearish very, very fast, very, very quickly. And that's not what the bulls want to see, but it's absolutely what the bears want to see. So, if there is an area to bounce, it is going to be this area. So, we're at the bottom of the channel. So take that for what it's worth. Now, take another thing for what it's worth is the fact that Netflix, right, kind of similar idea. It's a much larger channel, but nonetheless, it was also in this channel, which it did unfortunately break out, right? It couldn't find that bounce that it needed to, and now it's kind of bleeding out. You can see it. And I wouldn't be surprised if this sell-off gets a little bit more aggressive, right? Obviously with some bounces in between, don't get me wrong, but honestly, I'd be shocked if Netflix doesn't, for instance, revisit, 370 before a bit of a bounce and then probably a continued sell-off. So, Tesla's in a similar position, but it's still holding on and it's not giving it up just yet. So that's kind of an important thing to see as to what can happen if we don't find that bounce. So Tesla absolutely wants to, for the bulls at least, right? So that's an important region to pay attention to as well. Now, one thing that's a little bit interesting is, again, this squeeze meter on the daily actually did have that red circle the other day, right? Just yesterday. And then it's already back to a green circle. And unfortunately, it is showing a bar to the south side, which showing that the squeeze, even though I don't know if I would even really constitute this as a massive squeeze, it's just one bar. I'm not really sure. I personally haven't used this indicator enough to really quantify if one red circle is enough to really justify it, right? Because prior to this, it's been, whenever there's been red circles, it's been like 3 at the very least here, right? Then we had, a bunch over here. What can happen though is you can see over here, we had one red circle into a green circle and then into a bunch of red circles as we just kind of went sideways before the massive, well, in this case, it was a bit of a sell-off, you can see here, because, went to the downside. And then, of course, we had a massive rally after this 4-day squeeze over here, 5-day squeeze through here. So we'll see if we get a red circle tomorrow, and then that'll kind of replicate what happened back over here, where it was a red to a green to a lot of red, which is kind of what I expect, honestly. This wouldn't shock me whatsoever if that's what we get over here. But just something to consider. So I'm not really putting too much weight into it just yet, but something to pay attention to, and we'll keep revisiting, of course, throughout the days. Now, tomorrow is going to be an important day, right? Tomorrow, Jay Powell is speaking, and probably even more important than that is, of course, Tesla's delivery numbers are coming out on the weekend, I believe this coming Sunday. So that could be a pretty massive contributor, of course, right? Obviously, Tesla's deliveries have been already downgraded. People are expecting not a beat, or essentially, or like, I believe it's not going to be a growth quarter over quarter, I believe, or year over year. I can't remember. It was one of the two. Mainly because of the shutdown of the lines, I believe, in Shanghai and or Texas, Giga Texas. I can't remember. I think it was just Shanghai, but correct me if I'm wrong. But specifically, I think for the Model Y upgrade and or the Model 3 upgrade, the new Model 3 upgrade, right? So they're upgrading the lines essentially. So there was a shutdown for a few weeks, which of course is going to halter productions, which of course is going to obviously net less sales. And that's why the downgrades happen. And maybe that's what the market is pricing in still, I guess. I'm not sure. Feels like it's been kind of old news at this point, but we'll see. But the point is the fact that we're entering some pretty massive news and pretty massive catalysts that can definitely alter how Tesla moves. So if Tesla actually beats the new revised delivery estimates that Wall Street and the street itself has put out, that could be great, and we can get a nice, beautiful bounce from there. And I still think that 260s is absolutely in the play. But obviously, if it misses, and we get a sell-off, I think that's when it gets really, really bearish, especially if we do fall out of this overall massive ascending channel. So I think that'll be something to watch, and we'll kind of go from there, right? But that's kind of what I am seeing right now. Option flow has kind of been all over the place. It was quite bullish when Tesla was at 235, and now it's going back to kind of a neutral stance over here. There's nothing really to pay attention to. Honestly, it's very neutral now, right? Bullish and bearish, right? People are kind of not really sure where it's going next from here, it seems like. So take that for what it's worth as well. But all in all, that's kind of the main things to pay attention to as of right now. And really seeing if this closed at pretty much just exactly at the 100-day moving average is enough to get a bit of a bounce, or is JPL going to make the market bleed even further, or what's going to happen with that? You can see also SPY, we talked about this the other day, right? I think it was just yesterday, bouncing right off the bottom of the channel so far, which is great. If the market gets a bounce, hopefully finally Tesla can follow suit. QQQ also bouncing at that level we talked about, so hopefully we can at least bounce to the 100-day moving average, which is about 360, if not maybe gap fill around 365. So that's also a possibility. But overall, that's kind of what I am seeing. I personally expect some kind of bounce here for the market and Tesla, and I'm kind of hoping for it in all honesty, but we're also a bit on thin ice as bulls, so you want to be very careful, and you don't want to put all your eggs in one basket, in my opinion. Not financial advice, just my thoughts, of course, thinking out loud. But, you know, again, if this gets ugly, or I guess if this gets more ugly than this, unfortunately, it's going to snowball pretty aggressively, in my opinion, into the rest of this month and October. So hopefully that doesn't happen, but it is, of course, a possibility I am considering. So all that being said, thanks for watching. If you enjoyed, don't forget to hit that like button. I'm doing that. I don't know what I'm even doing with my arm here. But as usual, I'll see you tomorrow. Peace.